This is a production cost report. It should look familiar because all it is the worksheet that is used to show the 5-step process that we just used to account for costs. So the first part of the production cost report shows units to be accounted for, and in this case there's 20,000 work in process beginning inventory, and then we started 92,000 more units. So we have 112,000 units to account for, and then at the end of the period, we see that 96,000 of that 112 was transferred out. So we do the math and we calculate that 16,000 is still in work in process in inventory, and that's how we account for the whole 112,000 units. So in the first part, we were accounting for units, and then the second part, which is the second part of the production cost report, we're accounting for costs. So we're allocating these costs based on our calculations of equivalent units that was on the first part, and then we allocate these costs accordingly. So now we're going to talk about the 5-step process using FIFO. All right, so in our homework we're going to have, I believe we have one FIFO problem. I want you guys to concentrate on weighted average method because that's what I'm going to test you on, but I also want to do at least one FIFO problem in the homework so you understand how to do it. It's really not very difficult, but it's something that there's enough differences between weighted average and FIFO that it's good to work the two different methods. The 5 steps are going to be the same, where you're measuring the physical flow of resources, computing equivalent units, identifying product costs, and then doing your cost per equivalent unit, and then assigning product cost to batches of work. So the 5 steps are the same, but the calculations are done just a little bit differently because we're doing FIFO in this situation rather than a weighted average. So for step 1, as the slide says, it's going to be exactly the same as weighted average. The problem tells us that we have 20,000 gallons in work in process, and then we start another 92,000 gallons, so we have 112,000 gallons to account for. At the end of the period, we see that we transferred out 96,000, so that means that 112 minus 96, that means that we have 16,000 left in work in process. So to check your work, you do 96 plus 16, and you get your 112,000. So again, it's exactly the same as weighted average for step 1. Now in step 2, we're going to see some differences here. We start out the same. We know that we have 20,000 units that were in beginning work in process, and that we it says that we started and completed 76,000 units in the period. So that gives us a total of 96,000 units that were completed and transferred out. And then we have 16,000 in work in process inventory. So when you do the 96 and the 16, that's your 112,000 units to account for. Now, for the 112,000 units, this method, the first in first out method, makes us consider where were these units from. So we know that 20,000 of these 112,000 units came from beginning work in process, so then we must do the math there, and we calculate that 92,000 of those units must have come from new work done in March. So here we're making a distinction about the units to account for, which ones were from beginning work in process and which ones were from the current period. So now we move on to step 3. Step 3 is going to be the same as what we did in the weighted average method. So just as identifying the units to account for is identical for weighted average and FIFO, identifying the costs to account for is going to be identical as well. So again, this is going to be the same exact step that we did using the weighted average method. Now, step 4 is going to be different as well. So if you remember, when we're doing the weighted average method, we take the costs that were beginning work in process and then adding current costs. But in this situation, all we're doing is considering current costs. All right, current period costs and activities. So in this situation, on this slide, it tells us that March's materials cost of was 84,640, and if we divide that by the 92,000 equivalent units, that gives us 92 cents per equivalent units for materials. All right, and then conversion costs for March was 213,634. We divide that by 95,800 equivalent units in terms of conversion costs, and then when we do that math, divide that, we're going to get $2.23 per equivalent unit for conversion costs. All right, so to calculate the cost per equivalent unit using FIFO, again, we're only using current period costs and current period activities. And then finally, step 5, we're going to assign product costs to batches of work. One thing that I want to bring to your attention here is this middle column, the second row down with a 0 here. So the first row, it says that these are the costs from beginning work in process, okay, and then it gives you amounts for materials, materials costs and conversion costs. And then the second line is the cost to complete the beginning work in process inventory. It gives us a 0 for materials costs. Now, if you recall, the book tells us that materials costs, materials are added at the very, very beginning of the process. So as soon as a unit is put into existence, it has 100% of the materials that it's going to need. So to complete these partial gallons of adhesive, we're not going to add any more materials, but we will have to add some labor and overhead costs. So that's going to be your conversion costs. So again, you need to pay attention to when certain components of an item are added to the process. So again, materials was added at the very beginning, so you're not going to need to add any more materials to finish up what's in work in process inventory. So which is better, the FIFO or the weighted average method? Well, each one has their positives and negatives. Weighted average is probably a little bit simpler to do. You're just adding up the costs and finding the average, whereas FIFO, you're separating the prior period and the current period. It's easier, or you're keeping the costs straight in terms of which period they were incurred in. So maybe you could say that FIFO is a little bit more accurate, but probably costs more and is more labor intensive. Whereas weighted average is a little bit simpler and probably a little bit easier to do as well. So again, each accounting choice is going to have its positives and its negatives. So here's an illustration of the difference between the two methods and what can result from the two methods. It shows here that if you're doing the weighted average method with these numbers, materials cost is 90 cents per equivalent unit, and then 220 for conversion costs. For FIFO, materials cost is a little bit higher, and conversion costs are a little bit higher as well. When you're extrapolating these numbers, your cost of goods transferred out for the weighted average method is $297,600, whereas in FIFO it gives you a little bit smaller of a number, $297,136. So weighted average is higher, but then the work in process is a little bit lower. It's $24,960 as compared to $25,424. Now, the total cost in the end of the day, they're going to be the same thing, but it's the intermediate time, the intermediary time that that's going to have a different effect. So remember, cost of goods transferred out, and that's going to be that's going to be going to finished goods, and then work in process ending inventory stays in work in process. All right. So when something is in finished goods, that's already one step away from going into cost of goods sold, which is an expense. A work in process is still an asset. So in this case, I mean, the numbers aren't that different. We're dealing with $297,000. One method results in $500, roughly $500 more in cost of goods transferred out than under FIFO. But so when you're dealing with small enough numbers, maybe the method does not make a big difference. But imagine if you're dealing with millions or billions of dollars, the method can make a huge difference. All right, so and that's one thing to watch out for. Some managers like to switch between methods in order to manipulate their earnings for a certain period. But generally speaking, you're going to account for the same amount of goods overall. So in the long run, it's not going to make a difference, but it might make a difference in the short run. This slide reiterates what we've talked about several times. You have to choose when to use job costing and when to use process costing. Job costing is good for individual or unique units or jobs or services. The examples here are custom homes, movies, and services, which would be something like accounting services or law firms. Okay, and then for process costing, that's when you have homogeneous units, identical units, such as cornflakes, beverages, and paint. Now, you're not going to be able to trace costs to one cornflake versus the next. Same with beverages or paint. It's going to be very difficult. So you're producing a homogeneous product, and then if that's the case, you account for a process instead of trying to account for certain jobs. We also have operation costing, and we've talked about operation costing before. So it's kind of in between job costing and process costing. Remember, job costing is when an item or a product is unique. Process costing, on the other hand, is when an item or product is homogeneous. And then operation costing is going to be right in between. It's used in certain goods that have some common characteristics plus some individual characteristics. All right, question 1. It says Pierce & Company provides the following information concerning work in process. It says beginning inventory was partially complete. It was complete for materials, but not complete for conversion costs. Conversion costs are only 40% complete. They started 252,000 units this month, transferred out 210. And remember, when it says transferred out, that means that it's 100% complete. And then ending inventory is 140,000 units. All right, so for A, it wants us to calculate the equivalent units for materials. So what we do here is we look at the units that were transferred out. And that's 210,000 units. And then we have units in work in process, and it says that there's 140,000 units in ending inventory work in process, and that they are 100% complete for materials. So that means that that the 140,000 units are complete for materials. So we use 140,000. We add those together, and we get 350,000 equivalent units for materials. Okay. Now for part B, we're doing the equivalent units for conversion costs. So again, we have the units transferred out. And remember, units transferred out are 100% complete. So it's also going to be 210 for conversion costs. But for work in process, we have 140,000 units in work in process and the inventory. But for conversion costs, they're only 45% complete. So we're going to do 140,000 times 45%, and that gives us 63,000 units, equivalent units. So you add those up, and you get 273,000 equivalent units for conversion costs. All right, so again, you just take your units transferred out because you know that those are 100% complete. Then you look at your work in process ending inventory, multiply that by the percentage done, whether it's materials or conversion costs, add those two together, and then you get your final equivalent units for materials and for conversion costs. Question 2, Aaron Company is doing process costing. Materials are added when the conversion costs are reach 50%. So halfway through conversion costs, then that's when you add materials. Okay, so this is a little bit different from prior problems that we did where materials are added at the beginning. In this case, they're added right at the midpoint. It gives us amounts for work in process. We had 150,000 units that were 60% complete as to conversion costs. Now it doesn't tell us how complete they were for materials, but we should be able to figure that out, right? Because if remember that we're adding materials at the 50% mark. So we're adding all materials at the 50% mark. So if these units are at the 60% completion mark, that means that all of these units already have all of its materials. All right, so let's keep that in mind. It gives us the number of units started in March, which is 600,000 units transferred to finishing department. Remember, when they're transferred out, that means that they're 100% complete. And then finally, work in process on March 31st, and they're 40% complete as to conversion costs. Again, they don't tell us what the percentage of materials are, but the fact pattern told us that that materials are only added when they reach 50% for conversion, and these are only at 40, so so they don't have any materials in them. So for part A, it says compute the equivalent units for materials cost and for conversion cost using the weighted average method. So the weighted average method, as we talked about, is going to include current costs as well as prior period costs. So the way to calculate this is what we did in question number 1. We're just going to add the units transferred because we know that those are 100% complete, plus any ending inventory, and we have to calculate based on the percentage done. All right, so for materials, units transferred is 630,000 units. And then ending inventory, let's see. Ending inventory, there's 120,000 units. But remember, the facts say that they're only 40% complete as the conversion cost. And remember, we don't add any materials until we get to 50%. So actually, we have to we have 0 materials, so ending inventory as of materials is 0. So when you do 630 plus 0, you get 630,000 equivalent units. So that's your answer to 2A for materials, 630,000. Now for conversion cost, we're going to do the same thing. We're going to look at units transferred, and we know that that's 630,000 complete units, 100% complete. And then we look at our ending inventory in terms of conversion costs. It says that we're 40% complete. So we're going to take our units, which are 120,000 units in ending inventory, multiply that by 40%, and we get 48,000 units. Add those up, and we get 678,000 units for conversion cost. All right, so that's 2A conversion cost, 678,000 units. All right, now for part B, it wants us to calculate the equivalent units based on the FIFO method. So remember, there's a difference between weighted average and FIFO. Weighted average, we're averaging out the prior period cost with the current cost. But for FIFO method, we're just looking at current costs. All right, so let's see how those change the numbers a little bit. So for materials, we see that we've transferred out 630,000 units. Right, but remember, we're not counting anything from a prior period. And beginning inventory, we had 150,000 units in beginning inventory, and those were 100% complete. As to materials, so we're going to subtract that out because we don't want to add that for this calculation. So we do 630 minus 150, and we get 480,000 equivalent units for materials using the FIFO method. For conversion costs, we have a few different calculations to do. One thing we're going to do is look at beginning inventory. Beginning inventory, the problem says that we are 60% complete as to conversion cost. So we're going to have to add in another 40% for this period. So again, 60% was complete. That was incurred in the prior period. So we're going to have to do 40% in the current period to finish it off. So 40%, we're going to multiply that by the 150,000 units in beginning inventory, and we get 60,000 equivalent units. Now, we also know that we started and completed 480,000 units. So how do we know that we started and completed 480,000 units in this period? Remember, when it says started and completed, that means that the entire unit was started and completed in this one period. So it was not partially done last period. It wasn't part of beginning inventory. It was completely made within this one period. So how do we know that? Well, we know that the question tells us that 630 units were transferred to finishing. So so we have 600 units that were completely finished, right? But we also know that we had beginning inventory of 150,000 units. So if you have 630,000 units that you completed, 150 of it came from the prior period. So that means that you had 480,000 units that were started and completed in this period. 630 minus 150 is 480. And then finally, you have to consider ending inventory. Ending inventory, it says that we have 120,000 units, and that we completed 40% of conversion costs in this period. So 120,000 times 40, that gives us 48,000. So you add these three up, 60 plus 48 plus 480, and you get 588,000 units, equivalent units as to conversion costs. So one thing to consider here is for beginning inventory, that's what you need to complete. So you need to complete 40% more. And then when you're talking about ending inventory, the percentage you use is what did you complete. All right. So again, beginning inventory percentage that we use is what we need to complete. So we completed 60% in the prior period. We need another 40% for the beginning inventory. And then for ending inventory, the problem just tells us that we completed 40%, so that's what we use for that calculation. And then part C, it says that the president of the company has been pressured to increase income. So he tells the controller to change the estimated completion for ending work in process to 60%. The original estimate is 40%, and now he's directing the controller to change it to 60%. So what effect will this have on the unit costs of the units transferred to finished goods in March? Well, the company incurred a certain amount of cost. Okay, let's say it's they incurred $1 million of cost. Now, where are they going to put this cost? Are they going to put it to the units in finished goods, or are they going to put it to the units in work in process? Originally, the calculations showed that that the company applied 40% of these, or they applied the costs to the work in process up to 40% of work in process, and then the rest go to finished goods. But now they're saying no, apply enough costs to work in process so that they look like they're 60% complete. So if the costs are being shifted to work in process, they're being allocated to the work in process inventory. That means that the finished goods inventory is going to be kind of low. It's not going to have enough costs in it. So that means that C1, the effect is it will reduce, the change will reduce the unit costs for the goods transferred to finished goods. Again, the costs were allocated to work in process a little bit too much, so so that'll reduce the costs that go to finished goods. C2 says, would this be ethical? And the answer is no, because you can't just change numbers just because they give you better results. So the numbers need to be reported accurately, no matter who likes it or not. You just need to report the correct numbers. That would be the most ethical thing to do. And then part C, C3, it says, is this likely to be a successful strategy for affecting income over a long period of time? And that answer is no, because you have your costs, and you either put them in this situation in work in process or in finished goods. Either way, it's going to make its way to finished goods in the long run. So even though you might put too much in work in process now, it's going to make its way to finished goods probably by the next period. So some people might ask, well, what's the big deal if it really doesn't matter? What's the big deal if it's going to be expensive in the long run anyway? Well, it is a big deal because you want your amounts to be accurate per period, because you can fool investors by inflating numbers in one period and deflating them in another. But like it says, in the long run, it's not going to make a difference though, because so maybe you inflate your income this period. Well, next period, unless you do the same thing again, your income is going to be a little bit deflated. So that's why it's always not a good idea to manipulate numbers. Really better to always act ethically. It'll save you a headache in the long run. All right, and then finally, questions 3 and 4. In these questions, we're dealing with the weighted average method again, which is what we dealt with in the prior homework questions. So I'm going to let you guys work on those on your own. Make sure to pay attention to when materials are added, when conversion costs are done, and the percentage complete as to materials, percentage complete as to conversion for beginning and ending inventory. So it's again, it's the same stuff that we've already done, but this is just two good questions for you to practice on. And a similar question might be on the test. Remember, for the test, we're not going to do any FIFO problems, so make sure that you are well acquainted with the weighted average method, and you should do fine. All right, and that's the end of Chapter 8. Next week is the test, and then we're on to the final leg of the semester, Chapters 9, 10, and 11, which will be covered on the final exam. All right, thanks.